Hey, it's Anthony Meisner with Land Title. I wanted to bring you your Greater Metro Denver update. So let's get into the nitty gritty details here. We have some interesting stuff happening. We have a large increase in active units of inventory on the market. And it's not necessarily because buyers aren't buying, right? It looks very seasonal, fairly seasonal norms, but those sellers that have been sitting on the sidelines for the last 2 years or so have really come to market in the last couple of months, and that's put our active units of inventory up to about 6,600. But we are putting a lot of those under contract. 4,300 went under contract last month. The average sales price for the entire county is up about 5%. Pendings are a little bit better than they were this time last year too, but solds are nearly flat up to this point. But this is a good sign because increasing demand and increasing supply is going to lead to a little more deals this year. So this is a good time to talk about kind of what does this mean for the environment and real estate, right? 6,600 homes is way less than you usually need on market in order to have a balanced market. But you can see over the last few years, people have been used to these these really tough environments, right? So our buyers are competing a lot. They're a little contentious, right? Sellers have kind of held all the cards, but now we're starting to move a little bit more towards balance. We're nowhere near balance yet. Balanced market is about 15,000 units of inventory through the Denver metro area from my perspective. But the good thing is here is certain markets have really seen big increases. So if you're working with buyers, they might have really good luck in Arapahoe or Broomfield or Denver, which they were struggling a little bit more before. But Jefferson and Elbert and over in Adams County, a little less inventory increase than what we've seen in years past. So here we are with one of these markets that is definitely divulging. So let's take a look in the detached versus the attached market, because as markets transition, these two usually move at a little bit of a different pace. The detached market, the active units of inventory right now are definitely above where they were last year, right? So the month supply of inventory is 1.87. That's still a strong seller's market in many cases. You could see bidding wars in some markets, right? Somewhere like Broomfield or Jefferson County, where we're at 1.4, 1.2, those are strong sellers markets still. So you're going to feel that in the marketplace. You get out into an Elbert County where it's at 3 months of inventory, it's going to feel a lot more balanced. So it definitely depends on where real estate is selling. And this is in the detached market. So as they start to shift differently, the attached market is really starting to pile up. We have 78% higher month supply of inventory than we had this time last year. Now, that's an okay swing because 2.2 months of inventory is still very competitive. This is still a good market in many ways, but it is tough that we've seen so much more add up. In Arapahoe and in Broomfield and in Denver counties, we've seen almost 100% or over 100% increase in month supply of inventory. So we just haven't been selling as much of it. But that doesn't necessarily mean it's not selling. It just means that more is coming to market. If we go to the days in MLS is trending seasonally just like you would expect. It's not going to get anywhere near where it was last year because we have more inventory. It's going to take a little bit longer for these things to sell. But 31 days on market is a really good sign that, we're still seeing our normal seasonal trends. And it's just a good way to set some expectations. The faster markets at 25 days in MLS, the slower markets, in the mid to high 30s in many cases. If you're in Broomfield, it saw a weird anomaly last month at 55, but that'll shake out just like everything else. If you look by price range, this is the one thing where Denver County or Denver Metro seems to be doing remarkably well. Our luxury market is doing really good. Above 800,000, we're seeing a lot more sales, and then below 400 or below 500,000, we're seeing a lot less sales. It's very balanced and similar, right in the middle of the market. Now, that 3+ million mark, we've seen 110% increase. So the high end luxury is doing remarkably well. We're seeing a ton of sales up there. That 2 to 3 million mark, same thing, 27% increase in sales. It's looking really, really healthy and strong. So that's a great sign. If we go over to the month supply of inventory days on market, it tells us that story as well. You can see the most competitive parts of the market are that 4 to 499 region at less than a month and a half of inventory, but really anything under 800,000 or even under a million is still in a very good market. It's very competitive. If you're a seller, get that stuff out there. You'll definitely be able to get it sold. Now, you will have to work with buyers a little bit because things are taking a little bit longer to sell. You're just looking for a good offer. Sometimes you'll get maybe two if it's really buttoned up house, three if you're super lucky. But look what happened at the super high end. We had all those sales and they sold in 11 and a half days. What that tells me is if things are priced right, they're buttoned up, they still have a really good chance of selling. There are a lot of people out there with cash. They would like to park it somewhere safe. And the Colorado real estate market has always been a very safe place to put some money. in fairly uncertain times, right? I mean, 8 months of inventory at 3+ million is really not that bad. It is definitely a buyer's market, but as you can see, not all inventory is created equal in that marketplace. All right, so let's talk a little bit about sales. Sales are flat year over year this time versus last year. That being said, not such a big deal. Let's just kind of dive into where those sales are taking place. Places like Broomfield, almost 16% increase in sales. Elbert County is 6% up. Denver County is 4% up. The ones that have slowed down a little bit, Adams, Jefferson, and even into Douglas County. But other than that, it's all very similar, right? We're not extreme differences in sales. The good news is I think things are looking a little more promising right now with buyers coming off the sidelines. Year over year, it might look pretty level, but we are going to see more increase in those under contracts, which is going to create more sales. So we're slowly digging our way back into a little bit more sales market. Now, it will not be anything like 20 or 21. It's going to feel, or it's going to slowly increase, right? As seasonality takes its hold, as interest rates start to lower, you will start to see a slow increase in sales. So that's a good sign. Now, what does that mean with this reduced amount of sellers, reduced amount of buyers for home values? Now, this time, year over year, we're up $53,000 from this time last year in sales. So the seasonality, yes, you can see it there. Those waves that we go through, the December, January timeframe is usually the lowest. This May, June timeframe is usually the highest, sometimes April. And we're seeing just a good bump up from where we were. Now, we still didn't reach the peak of 22. So yes, we had an incredible peak in 22. We're very close to that now. I think 23 was a very transitional year. And here we are in 24 that still feels like transitioning. But because of all the equity gains that we've seen in the last year, from last spring to this spring, we're basically caught up with where we were in 22. Now, I'm really confident about that and positive with this information because this is a good sign for those guys who maybe bought during the pandemic. Maybe they're not in the right house that they wanted to be in, but now they actually have a positive, good equity situation. They can help them transition sometime in the next year. So that's detached. Check out attached. Attached has been very flat over the last couple of years. We had some of those crazy peak sales. We still haven't come back to those numbers in 22, but we are very level. So 1.43% increase from this time last year. It's about a $6,000 increase, but the attached market is still very affordable in many ways. It's just that cost of money that's prohibitive. So, if you're moving from a detached family or detached house to an attached house, that might be a way to get somebody under contract. But if they just don't quite qualify, sometimes these HOAs are getting a little out of control with the increases in our insurance rates and taxes and stuff like that. So it's becoming a little bit less affordable out in the marketplace, but the attached market is feeling that a little bit more than the detached market. Now, check this one out. This will give you the kind of the year-to-date information. We had kind of an abnormal March last year, but other than that, we're right on the same line as we have been in the previous year. And it really shouldn't surprise anybody because even though we have a little bit more inventory, buyers are still at that reduced rate. Now, that will change eventually. Just we're kind of hanging in there for interest rates because we just need more people to qualify. So it's really an affordability issue. But you can see here across year to date across the counties, it's all pretty well flat except for a place like Elbert, up 11%, or Jefferson's down 6% in sales, but everywhere else is pretty level. Now, the last slide I have to talk to you about is our percentage listed sale price. So this tells us kind of at the peak of the market in that April timeframe, May might be a little bit better than this. We're still seeing 100% listed sale price, right? And if you look over at the table on the bottom, the vast majority of those are from 400 to a million. Now, that means that on average, people are paying asking price or slightly above asking price at most of those marks. And that doesn't factor in concessions. It doesn't factor in price drops if price drops occurred. But what it does give you is it gives you a bearing of when you're working with a buyer, they're going to have to get out there. They're going to still have to be aggressive with their offers, but they might be able to get a little bit of relief on the interest rate. Now, maybe not if it's the most buttoned up home just came on the market, but if it's sitting for 30 days and you make a full price offer, that could still actually happen. And we're seeing it up there. Now, the craziest thing is the luxury market is almost in the same boat, right? 3+ million went for 99.6% list price last month because really cool, expensive luxury houses there's still a lot of demand for those. And you can see that here. So that's really cool. If you ever need the highlights, we do put a highlight reel together. You can always tune into this. We usually throw it at the front of the presentation, but I didn't want to bore you with all the text at the beginning. So if you have any questions, feel free to reach out to us. I'm Anthony at Land Title. I hope to catch you next time.